Hi there and welcome. So in today's video we're going to be comparing Pepsi versus Coke, two very famous rivals. This is a video that was requested in the comments of some of my previous videos. If you're one of the people who request this video, thank you so much. I do listen and I do read every single comment, and if you're watching this and you'd like me to review any particular stock or do a versus of two companies, please feel free to leave a comment in the description down below and I'll add that to my list, so thank you for that. If you've watched my Versus series before, you'll know how I do this. We literally compare on various metrics the companies, so we at the end get a score and we can see which was the best investment, and that's exactly the same format I'll be following with Pepsi and Coke in the video we're doing today. So you'll be able to see how they compare on each of the metrics that I go through in my Versus videos. So we'll be looking at the balance sheet, we'll be looking at the business risk, we'll be looking at the analyst forecast for the share price and more. At the end, I shall be giving my opinion as to which one of the two I would prefer to invest in, given the choice. If you're new to this channel, welcome. My name's Andy, and on this channel I like to talk about money and success. If you're interested in either of those two topics, please be sure to hit that subscribe button down below, hit the notification bell, and then you'll be notified every time I release a new video. And if you enjoy this kind of content or find this video useful in any way at all, please remember to give it a thumbs up, because that really does help the YouTube algorithm, which in turn helps me, and I appreciate that, so thank you. We'll start off by quickly talking about the business risks of each. So let's have a little look at what they actually do. Everybody knows who Coke and Pepsi are, but what people don't know is just how many brands they have. And they do have a lot of matching brands, so I can see why they're very much like for like. Let me give you an example. I made me a list here. So obviously you've got the Coke and all the Coke brands, and then you've got Pepsi and all the Pepsi brands such as Pepsi Max and Diet Coke and so on. But then you've got Coke owned Powerade, whereas Pepsi owned Gatorade, Coke owned Minute Maid, the orange juice company, and of course Pepsi owned Tropicana, also orange juice company. Coke own, when it comes to water, they have Smart Water and Aquarius, whereas Pepsi have Aquafina and One. Coke own Innocent, as in Innocent Smoothies and the entire Innocent brand, whereas Pepsi own Naked, whereas Naked Smoothies and all the Naked brand. Coke also have Sprite, which is basically lemonade, and Pepsi have 7-Up, which is, again, basic lemonade. Actually, they're not. They have a hint of lime, as I understand it, but you know what I mean. Coke have Gold Peak Tea, whereas Pepsi own Lipton Tea. So we've got a lot of very similar things going on there. Now, here's the difference. This is where it gets different. Coke, whilst they've got thousands of brands, they're all beverages, all non-alcoholic beverages. That is what Coke do. It specialises in beverages. So it's literally is the biggest non-alcoholic beverage company in the world. That is Coke in a nutshell. It's probably the most famous brand in the world, Coca-Cola, or certainly one of the most famous brands in the world. If you said to someone, name 10 brands, I'll bet you Coke is going to be one of the 10 that pretty much every person in any country in the world would name. So that's how big Coke is. Pepsi, also massive brand, but Pepsi doesn't just do the beverages. In addition to beverages, Pepsi also has food brands as well. So it owns Quaker Oats, it owns Cheetos, Lay's, which in the UK here, that we know that as Walker's Crisps. They do Fritos, Doritos. In fact, let's have a look at their website. Here you go. So this is their website here, Pepsi's website, and here's some of their top brands. As you see, Pepsi, Mountain Dew, Doritos, Quaker Oats, Ruffles, Cheetos, Fritos, Totitos. It goes on. So this is just some of their brands. If you click on the food brand, you'll see, again, lots of different types of crisps, some kind of hummus there, couscous even, some healthy eating options. So they're clearly branched out. They are not just a drinks company. Make no mistake, this is not just drinks here. They have all kinds of things under all kinds of brands. So both companies have thousands and thousands of brands. The difference really is that Coke is liquid, mostly liquid, so it's a beverage brand, and Pepsi also does food as well. First comparison result, business risk. I've got to be honest, I'm giving them a 1, and I'm giving them a 1 each, because whilst Pepsi is more diverse in that it does food as well as beverages, I don't think we could really say that that Coke is high risk. You know, Coke is covering water. It covers every kind of non-alcoholic beverage. If you want a healthy drink, there's the Innocent Smoothie brand. You want no calories, fine. They've got at least 2 or 3 types of water brand. If you want fizzy pop, they've got you well covered. Basically, if you want some liquid, and everybody has some liquid every day or we will die, Coke has you covered. So the risk of Coke going under, business risk, I've got to put that very low. So to score one over the other, I think would be unfair on that, which is why I've given them 1-all in the example, or at the end of round 1, which is what this result shows you here. So let's move on to the next round now. So let's look at the charts now. So Coca-Cola, ticker symbol KO, its current price is $48.45. As you can see, it peaked in late February, and in late March it went to its all-time low, which was 36.27. I say all-time, I mean 52-week low, obviously, which was $36.27. Its peak was $60.13 per share. Since kind of late April, it's been operating in the range between $50 per share and $45 per share, and it's currently standing at $48.45 per share. It has a dividend yield of 3.38%, which makes it a high-paying dividend stock. Certainly for a Dividend King, it made it into the top 10. If you saw my Dividend Kings video that I made last week with the top 10 highest paying Dividend Kings, this was one of them, because Coca-Cola has been paying dividends for in excess of 50 years, making it a Dividend King, which is how it made it into there, and it is one of the top 10 highest paying Dividend Kings available. It's got a PE ratio of 26.68. So let's have a look now at Pepsi. Pepsi, ticker symbol PEP, current share price $137.56 per share. As you can see, again, this one peaked in late February and dropped in late March to its 52-week low, which was $101.42 per share. Its 52-week high was $147.20 per share. As you can see, it also recovered, but it recovered more so than Coca-Cola did. So if you notice, Coca-Cola was down a little bit more. Coca-Cola's current share price is actually down 19.42%, whereas Pepsi's current share price of $137.56 is down from its 52-week high by 6.55%. It's got a forward PE ratio of 25.67, so a little bit lower than Coke's, so therefore indicating slightly better value. Yet it's got a slightly lower yield on its dividend. Its current dividend yield is 2.97%. So if we go on the comparison there, I'm literally giving the PE ratio, we're going to give that one to Pepsi because it had a slightly lower PE ratio, albeit only a little bit lower. It is lower, so we shall give that one to Pepsi because it does indicate slightly better value if you're just looking at that one metric. And remember now, you should never take any one metric on its own. You need to look at a range of metrics when deciding whether you should invest or shouldn't invest in any particular stock or share. Dividend yield, we have to give that one to Coke because it's slightly higher. Again, not a lot in it, but it is a slightly higher dividend yield at 3.38% per share versus 2.97%. So again, it's close, but that one is slightly more in favour of Coke, so that one goes to Coke. And as far as share price value, I'm actually giving that one to Coke because Coke has fallen further. So if it gets back to its 52-week high, it has more growth to go to get back to where it was before. So that's why I've given that one to Coke, because as you can see, that one is down 19.42%, whereas Pepsi is only down 6.55%. You could obviously look at the other way and say, well, Pepsi is less volatile, maybe due to that spread of products that it has. Maybe that's the reason. Let's have a little look at the income statement. We'll start with Coca-Cola here. Let's have a little look at Coca-Cola. So its revenues, 2015, 44,000, dropped a bit in 2016, dropped again in 2017, dropped again in 2018. I'm not liking that trend. And then rose in 2019 to drop in the current trailing 12 months. Their gross profit follows very much the same pattern. As you can see, 2015 it falls to 2016, falls again to 2017, falls again to 2018, then climbs a little bit in 2019 and drops again in the trailing 12 months. If we scroll on down and now look at the net income, so the net income column there, which essentially is the profit. In 2017 it was 7,351. This is all in millions, by the way, so it's actually 7.3 billion we're talking here, but it fell to 6.5 billion in 2016. It then fell dramatically in 2017. What on earth happened there? 1.2 billion. Then it climbed back up, almost full recovery by 2018, 2019 was looking much better, and I'm pleased to see that the current trading 12 months is the most profitable yet, so that's a good sign. So now let's do the income statement for Pepsi. So Pepsi, its revenue, let's have a look at its revenue, its total revenue there. Again, that fell a little bit between 2015 and 2016. It climbed back though in 2017, climbed again in 2018, climbed again in 2019, and climbed again in the current trailing 12 months, which is obviously a happy state. Then on the gross profit there, just below that, it went up between 2015 and 2016, up again in 2017, up again in 2018, up again in 2019, and up again in the current trailing 12 months. That's the kind of trend we like to see. So the net income, it went up in 2016, down a little in 2017, up a lot in 2018, down a little in 2019, and down again in the current trailing 12 months. So have a look at the operating income now for Pepsi. So it went up between 2015 and 2016, up again in 2017, kind of level in 2018, up again in 2019, and it's dropped just slightly in the current period. So I think we're going to have to give that one to Pepsi, simply because it was more consistent growth. Coke had more of an up and down pattern going on, whereas Pepsi was more consistent growth. There wasn't a great deal in it, but on balance, I think Pepsi slightly won. So that's why I'm giving this point to Pepsi. So now we're looking at the dividend safety. So Coca-Cola, what we look at here, I look at a few metrics here. So you can see its revenue per share versus its dividend per share. So in 2015, it had a revenue per share of $10.18 versus a dividend per share of $1.32. And then you can compare that again in 2016. It was still plenty enough headroom. Again in 2017, plenty enough headroom. And again in 2018, and again in 2019. Now, one of the things I'm noticing here is the revenue per share is falling. So it started off at $10.18 in 2015, fell to $9.70 in 2016, fell again in 2017, fell again in 2018. It climbed in 2019 in all fairness, and then it's fallen again in the current trading 12 months, whereas the dividend has been increasing, which is obviously because it's a dividend king, it always increases dividend, so it has always been consistently increasing, but obviously its revenue per share has been falling. So I like to look at the free cash flow and the payout ratio as well. The payout ratio should really be 75%. No, not really. We're not looking for it to go too much above 75% for this kind of share. And I can see here we've had a couple of bad years. In 2017, you'll see it went to 506%, which is obscene, over 100% in 2018, which obviously, I mean, it carried on paying its dividends, so it's got cash reserves. This is Coke at the end of the day. But if there's any other company you would be concerned about seeing numbers like that, it seems to have got that back in hand in the last couple of years. In December 2019, it was 76%, which is about right. And in the current trading 12 months, 75%, which again is fine. And I know I haven't shown you this, but they are actually targeting a 75% payout ratio. It actually says that on the Coca-Cola investors relations page. So I did read that they are targeting 75%. So that's where they're aiming to be, and that's where they are now. So that's fine. Their free cash flow per share to dividend, that really shows how much money they've got available to pay their share with without having to dip into their reserves. And you can see they paid a bigger dividend in 2017 than they actually had in free cash flow, and did the same again in 2018. By 2019, they got things back under control. And in the current trading 12 months, you'll notice actually the free cash flow per share is exactly the same as they're paying per dividend. So let's have a look now at Pepsi. Pepsi's revenue per share is much higher, $42.92 per share. So much higher revenue per share, but then it's a higher share price as well. Let's have a look. So that's increasing between 2015 and 2016, and again between 2016 and 2017. In fact, it's just increasing non-stop. So the revenue per share with Pepsi, that is perfect. That's what you want to see. It's continually improving. It's going up non-stop. Its dividend per share is obviously increasing non-stop as well. Its payout ratio, I can see looking at that, it has gone above 75%, but only twice, and it's never gone above 100%, so it's slightly safer than Coke's in that respect. And its free cash flow per share, you can see there's plenty of headroom. Doesn't matter which metric you look at there, there's always plenty of headroom. Even in the current one, the current trailing 12 months where it's tighter, you'll see they've got a free cash flow per share of $3.93 per share versus that dividend per share of $3.89 per share. If you remember, Coke was exactly the same figure. So this actually has a little bit of money left in the company even after paying the dividend out to the shareholders. And that's the case over every single one. So if you compare that dividend per share to the free cash flow per share, you can see there's plenty of headroom on that. Dividend safety, we've got to give that one to Pepsi. It's only fair to give that to Pepsi. Coke, as you could see, it went over 100% payout ratio a couple of times. Now, I'm not saying that Coke are going to cut the dividend, my word. I would be amazed if that actually happened. But their free cash flow per share, they've gone over that a couple of times now. They're paying out the same dividend this year as they're getting in free cash flow, which is basically 100% payout. Whereas at least Pepsi has got headroom. It's still got room to improve, to grow that dividend if it wants to, and still have cash left in the company. Coke has gone over that a couple of times. Now, Coke has massive cash reserves, I'm sure. We haven't got to the balance sheet yet. We'll see when we do. So I'd be surprised if that's ever going to be an issue with Coke. But certainly on this metric, we have to give that to Pepsi. It would only be fair to do so. So let's move on now. So next we're looking at the assets versus the liabilities. And you can see Coca-Cola's total assets and Coca-Cola's total liabilities there, and Pepsi's total assets and total liabilities. Now, remember that assets versus liabilities number, what we're looking for is a higher number. Bigger than 1 is good, so they're both fine because they're both bigger than 1. They've both got more assets than they've got in liabilities, but Coke's is slightly higher there, so that would be a win to Coke. And on the current assets versus the current liabilities, and if you're not sure what that means, current assets and current liabilities, they're the things that are due within the next 12 months. So that's what the current assets and current liabilities are. And again, we ideally want this number to be above 1. I mean, really, above 2 is great, but above 1 would be fine, especially for companies like these. And as you can see, Coke is above 1, Pepsi is just slightly below 1, so we have to give that to Coke as well. So let's go to the comparison now. And as you can see, assets versus liabilities, we're giving 1-0 to Coke, and current assets versus current liabilities, again, we're giving another 1-0 to Coke. So Coke takes that round quite definitely. Now we're going to have a little look at the balance sheets next. So here's Coca-Cola's balance sheet. What we're going to look for here is the trend. So the first thing I'm going to look at is the total cash and short-term investments. I'll underline that line for you now. As you can see, it rose between 2015 and 2016. It dropped a little in 2017, dropped again in 2018, dropped quite a lot in 2019, and then they've boosted that back up in the current 12 months, the trailing 12 months. So that's fine. I'm not massively worrying about that at all. It's a bit up and down, but it's kind of operating in a band, isn't it? Now we're going to have a little look at their current assets. So their total current assets, we're really looking for these to be increasing more than anything. So they started off at 33,000, went up 34, 36, dropped in 2018, dropped again in 2019, and then pulled back partway in the current report. Their total assets, again, you want them to be growing, and they in 2015, 89,000, dropped in 2016, went up a little bit in 2017, dropped in 2018, went up again in 2019, and up again in the current 12 months, so that's kind of fine. Now we'll look at the total liabilities. Again, that was falling, and then increasing, and then falling, and then increasing and increasing. So it followed the same trend as the total assets, so that's fine. Again, not particularly worrying about that. So now we're just going to take a look at the shareholder equity, stockholders' total equity there. So in 2015, it was 25,764. Bear in mind, this is all in billions. So that's actually 25 billion. It dropped to 23 billion. It dropped again to 18 billion in 2017. What happened? Dropped again in 2018 to 19 billion. Increased in 2019. And then it's fallen in the current 12-month period. So that is Coca-Cola's balance sheet. Let's have a look how that compares now to Pepsi's balance sheet. So Pepsi's balance sheet, it's total cash and short-term investments. So 2015 to 2016 increased again in 2017, fell off a cliff in 2018, fell again in 2019, and increased in the current trailing 12 months. It's total, let's have a look, total current assets, 2015 to 2016 increased again to 2017, decreased in 2018, decreased again in 2019, and increased in the current period. The total assets, they increased between 2015 and 2016, and again in 2017, decreased slightly in 2018, increased slightly in 2019, and I'm pleased to see that they're at a high now, so they're the highest they've been in the current period, so that's good. Let's have a look at their total liabilities. The total liabilities, they've increased and decreased it for a couple of years, but mostly it's been an upward trend, basically following the main trend of the assets, so that's fine. Let's look at the total stockholders' equity. Stockholder equity started off at 12 billion, fell down to 11, then 10, then up to 14, up to 14 again, and then it's fallen a little bit in the current report. So in many respects, very similar balance sheets, but I'm going to give that one to Pepsi simply because of the stockholder equity. If you recall, the stockholder equity for Coke fell from 25 billion to 19 billion between 2015 and the current time frame, whereas Pepsi's stockholder equity, whilst it went up and down, it basically stayed the same over the previous 5 years. So I'm going to give that one to Pepsi purely for that reason. Other than that, to be honest, not a lot in it in these two. So I think Pepsi just slightly on the edge because I'm looking at it from a stockholder, shareholder's point of view. I want my shares to be able to go up in value, and if the stockholder's equity is decreased, which it has in the case of Coke, that's not a good thing. Whereas if it's increasing, that's a good thing, and with Pepsi it stayed the same. So staying the same beats decreasing, so I'm going to go with Pepsi on that one for that reason. So now let's take a little look at the dividends for these companies. So Coca-Cola, it has a 3.38% dividend yield. Its current payout ratio is 90.32%. It's got a 5-year growth rate of 5.57%, and it's been paying dividends out for the past 57 years. Remember, over 50 years makes it dividend king, which it is. So that is the lowdown on that. We'll look now at its chart, and there's its dividend payout chart. What a thing of beauty. As you can see, it's been increasing every single year, and it has for the last 52 years. So that is Coke. Let's have a look now at Pepsi. Pepsi, 2.97% dividend yield, so a slightly lower dividend yield. It's got a payout ratio of 76.32%. Its 5-year growth rate is better at 8.41%, and it's been paying dividends and growing them for over 48 years now, making it a dividend aristocrat. In just 2 years' time, it will be a dividend king as well. Notice it's got a slightly better payout ratio at 76.32%. Let's look at its chart. And again, a thing of beauty. It's been consistently improving it. So that's what they look like when we look at the dividend charts for Pepsi. So dividend growth rate, we've got to give that one to Pepsi because it has an 8.41% annual increase versus a 5.57% increase from Coke over the past 5 years. So that has to go to Pepsi. In terms of the number of years they've been growing them for, while sure, Coca-Cola 57 years and Pepsi 48 years. 48 years is still a long time. I think it'd be unfair not to give it a point for that. It is a dividend aristocrat at the end of the day. 48 years is more than I've been alive, more than most people watching, I suspect, have been alive. It's a long time to be growing your dividends. So I think it'd be unfair to mark them down for that. So I'm going to give them 1-all on that metric now. Okay, let's look at the forecast now. So this is the analyst forecast for the share price for Coca-Cola. So the analysts are forecasting a 12.84% upside. They're forecasting that within 12 months' time, Coca-Cola will be worth $54.67 per share. So as I said, that's a 12.84% upside. So that makes it a strong buy. This is based on the reviews of 9 analysts. You'll see they've given a low of $48 per share and a high of $60 per share. So the average from the analysts is $54.67 per share. Let's look at Pepsi's forecast now. Pepsi's forecast is to be worth $145.58 per share in 12 months' time, which is a 5.83% upside, giving it a moderate buy. Slightly more analysts have reviewed this. There's been 12 analysts reviewed this one. You've got a high of $156 and a low of $130. As I say, that gives an average of $145.58. That's the forecast from the analysts, given a 5.84% upside, which of course means that we have to give that round to Coke, and that gives us our final result, which actually works out to be a draw, 7-all. Because on these metrics, they're even. There's not a lot in it. Now, if I was pressed and I had to choose between one of these two or the other, it really would depend on a number of factors, to be quite honest with you. Personally, looking at the numbers we've done here, if you was holding a gun to my head and say you can only buy one, which one's going to make you the most money over the next 12 months, I'd have to buy Coke. Two reasons for that. Firstly, it's got the higher dividend, and secondly, not only do the analysts think it's going to go up more in the next 12 months, I do as well. So I think there's more room for Coke to grow over the next 12 months than there is for Pepsi. Now, does that mean that I would want to hold Coke longer term than I would want to hold Pepsi for? Not necessarily. If Pepsi's price took a dip and that dividend yield grew slightly, then that would change the metrics entirely, and at that point I may be looking at Pepsi over Coca, especially if at that same time period Coke had increased in price. So you have to bear this in mind. These companies are very similar. I mean, I like the model of Pepsi. If you were to look in my fridge, I don't drink Coke, I drink Pepsi Max. I love Pepsi Max. I have got bottles of the stuff. I nearly showed you a photo of my fridge. In fact, I might put a photo of my fridge up here so you can see. But yeah, in all reality, if I had to choose from the products, I prefer the Pepsi product line. I prefer that it has food. I like that it has all of the different lines, whereas Coke is more just beverage based. But again, that's perfectly safe. I can't knock it down for that. But on the numbers, if I was looking as an investment point of view, right now, at this point in time, I would say Coca-Cola is the better of the two investments, despite my numbers here coming out as a draw. That's just the way it goes some days. But that could change, and the thing that I would say would change that would really be a drop in a price or an increase in the dividend yield. Really would make the change for me. I hope you've enjoyed this. If you would like to see any more of my videos, please remember, hit that subscribe button down below. Please check out the playlist we'll put on the screen up here now. And thank you so much for watching, and bye bye.